Volume was relatively low in the first half of the week as the markets nervously looked towards the EU summit for enlightenment on tackling the debt crisis. The aim of the crisis talks was to create a roadmap to a status of banking union, to instill public confidence and avoid a run of the banks, and fiscal integration in order to improve sovereign budget control and prevent any future debt debacles. And after the first day of negotiations on Thursday, progress was made as EU leaders agreed in principle to implement a single banking supervisor for the EU. This is definitely a firm step towards a comprehensive banking union, although details regarding the bank deposit insurance scheme still need to be ironed out. Spain and Italy's 10-year yields dropped, and equities also reacted positively to the news on Friday morning, turning around a weekly loss to a slight gain. Eurobonds are still the holy grail to kill off this crisis for good, although with German Chancellor Angela Merkel hardening her resistance to joint debt liability, progress on the aforementioned seems adequate for now. Barclays' share price plummeted Thursday on revelations traders have been fixing interest rates for personal gain, and the scandal also weighed on general sentiment across risk assets. JP Morgan was another major bank under the spotlight this week as a report by the New York Times estimated the actual losses incurred by credit default swap trading could be up to $9 billion. Both cases with Barclays and JP Morgan do raise the question whether the banks have learned any lessons regarding integrity and risk-taking, and raises concerns over the effectiveness of added regulations implemented in the wake of the 2008 financial crisis. Broadly speaking, economic data failed to influence the markets as it took a back burner due to the apprehension towards the EU summit. Highlights were the US durable goods orders and pending home sales, which triggered a rally Wednesday afternoon against a backdrop of a slowing overall picture of growth in the States. Economic data scheduled for next week includes UK manufacturing PMI Monday morning and the ISM manufacturing PMI from the US in the afternoon. On Wednesday morning we have a UK services PMI and Eurozone retail sales. Thursday is an eventful day with Spanish and Italian 10-year bond auctions, Bank of England and ECB rate announcements, US weekly jobless claims and the US ISM non-manufacturing PMI. Finally on Friday we have the hugely influential US non-farms.